There you go. How you doing, Jennifer?
Nice to put a face with the voice.
It's nice to meet everybody. It's nice to also meet the board. Long overdue.
Yes. My name's Jim Pinot. I'm the chairman of the Finance Committee. I'll let the other members introduce themselves real quick.
Mike Jackson.
Tina Dorn.
Frank DiCola.
I guess just to start, the curiosity from my standpoint, as I started at Price Waterhouse many years ago, and have worked doing companies and having audits done for the last 40 years. Why are we sitting here in January of 25 on the 23 audit?
We got a late start on it when we finally got the information, and it started last year when we started first year. We did the 22 audit. The 21 audit wasn't finished until January of 23. And then you guys had signed on with us. And then by the time we started getting the information and starting the 22 audit, it was the summer of 2023, of which we finally finished once we had to go back and forth getting all the information from management and whatnot. It took a while. We finally were able to get everything done in the January. Drafts went out in January of 24, and then there were some changes, and then the board finalized it in March of 24, and we were in tax season. So once we finished tax season, then we started getting the information to start conducting the audit for 2023. So it's not going to happen again this year, because as soon as we're done with the 23s, we were going to actually talk to Jennifer about, booking any journal entries and then sending us the information, and we were going to bang out 24s for you right away, so you can get those done up front.
By July, we could get 24 done?
Oh yeah, we were going to, as soon as we were done with everything, we were going to turn around and start celebration of the CRO 2024, so you can have that before the end of April of this year.
Because one of the problems, I know a couple of years ago, was Artisan Park not be getting information. So is it service area information that you don't get that holds things up, or?
There's 4 different areas. Jennifer will tell you, we're still waiting for the engagement letter to be signed for 2023. I believe for the committee, the celebration service area, Jennifer, it is. We're still waiting for that 2023 engagement letter to do the work. So, and we've been sending it for 8 months. So it's, one of those things, we send it, if we don't have the work, we're kind of working on other items. I'm not making any excuses for me having 2 employees quitting. That's an unfortunate thing that was out of my control, but I'm still the partner that oversees it. Patrick is one of my supervisors who's been with the firm over 10 years. And you're going to have he and I working on the accounts, so there'll be some consistency and some continuity. And also, I would like, if the board would, you could take my contact information, and I'm more than open for you to email me and call me if you ever have any questions or concerns as well.
Hey,
Jennifer, who was responsible for signing the service committee letter?
One of the board members of the CCS. Aldonia, do you know who that is?
Not off the top of my head.
Yeah, I'm not sure who that board member is off the top of my head either. Lauren was thinking it was signed, but you had a copy. Do you not have a copy?
2023 was never signed.
Okay.
2024, I believe, was just signed from
It was.
Canapa and CJC. Yes.
Would you take that on to
Yes.
follow up with CCS to get the 23 signed?
Yes.
Okay.
Jennifer, how long have you known that thing wasn't signed?
I've known for a while, and I've reached out to Lauren, and she was thinking it was already signed and just needed to be scanned in. So I think there was a miscommunication there.
Yeah.
I'll say it.
So Steph, what did you report on the tax return, on the 23 tax return when you sent it in, if you didn't have the numbers finished?
We actually have that tax return that, that's been prepared, that's gotta be sent in. We
You didn't
actually
send
have
it. You
No,
haven't
we didn't
sent,
it yet. No, we have it right now, right, Patrick?
Correct.
Correct. We actually sent it with a copy of the form to be signed so we can electronically file it because there was the taxes due on it, obviously, because you guys had so much income in the year.
That was joint that we
you-
sent recently. That was the
Oh, the joint.
that was
Okay,
the joint.
not the master. Okay.
so you held that, so this audit's open and you held the tax return. And now you're just gonna file it late.
Yeah, but we're filing an 1120H and there's no taxes due, so there won't be any penalties on a zero tax return.
Not for celebration
uh,
residential. We're doing 1120.
11 to 1120?
We're doing
Okay.
1120.
I was like, I was confused when you said CJC. I'm like, they shouldn't owe any
Yeah.
taxes.
Yeah. Okay.
So
Just back
Jennifer,
up for a second here, just to
Yeah.
clarify. I know we were talking about CCS, but I thought, Seth, you originally said that it was the service areas. So is it truly a unique service area, or is it the CCS entity that you're waiting on?
I guess it's the CCS entity to get the engagement letter so we can conduct the audit.
All right, so Jennifer, if you can, I guess, why are we doing multiple engagement letters? The engagement letter, I would think, would cover CROA, CJC, and CCS. So if there
No,
was some
it
disconnect
doesn't.
there and the original one or everyone needs to be unique, I don't know why there's that much of a difficulty on that side.
Yeah, I think there's four different subs, the associations. So there's four different jobs that are being done because there's four separate financials.
There's more than that, but yeah.
But yeah,
Well, look, I'm just gonna say, there's no excuse for this on everybody's part. I don't care how many subs there are or anything else. We've had lousy communication. This thing has drifted on. You know, Seth, I appreciate you'll give us your phone number, we can call you, but you're working for us. You need to call us and keep us informed. You gotta let us know what's going on. And I know you've got people quitting and issues and all those other things, but this just isn't acceptable. I mean, here we are sitting here and we're still trying to find letters and anyway, enough said. And I'll say one more thing, you know, I worked for a publicly held company 30 years, ended up in the C-suite. I had to attest every quarter back to Sarbanes-Oxley as to what was going on in the company and everything else. I could never think of not meeting with the accountants, the CPAs, and being able to do that. Because I had an obligation to the shareholders. This wasn't a little shop, this is a $44 billion company. A Fortune 50. So I understand process and controls. And if this happened inside that organization, I mean, it would be unacceptable, total. The shareholders would be rioting.
totally understand. And that's why this year, once I finish this, we're gonna jump right in and get you the 2024 done. So you have it before April 30th deadline.
So let me go back to the tax return for a minute, because you and Patrick were not in agreement. What were you filing in 2023?
Well, previously in
1120.
the previous year there was a 1120H.
I can't hear what you're saying. Can you speak up?
Yes, so previously there used to be 1120H that was filed for the celebration. But now this current year, there's gonna be 1120 based on.
Patrick, can you get closer to your microphone or whatever you're speaking into?
Can you hear me now? Sorry. Is this better?
Okay.
Yes, so previously done for 2022 for celebration, 1120H was filed. But in the current year for 23, 1120 has to be filed based on the amount of income the association has.
So you're filing 1120
1120 will be filed for 23,
for
correct?
2023.
Yes, celebration.
Okay, and so it's an 1120 that we just decided, well, we'll just send it in late and not request an additional extension. Wait, unlike Mike, I was a tax professional.
I talked to
I've
her.
never heard this before. You
I
just
didn't hear
decided,
that.
oh, excuse me?
I'm sorry, I didn't hear you.
You just decide that, well, that's okay, we're not gonna have any liability, so we don't care when we're gonna follow the term. And we're not gonna request an additional extension. You just send it in when you feel it.
Yeah, we filed the extension, but yeah, it went late because we just didn't do the work, but
Then you file
anticipate
another
any
extension.
penalties.
You file another extension and you explain why that you're not following the term.
Hmm. Yeah.
You guys, do you know how bad this looks or how bad this is from our perception or our understanding?
I 100% do, yeah, because we're sitting here in January of 25, going over December of 2023. And that's why we're gonna try to change this up. It looks like for the last couple of years, it's always been coming in so late. For whatever the reason has been, I don't know, we just started last year. So, we're gonna try to fix that this year and make all the timeliness come in and fix all these problems. So we're all working on the same, on the same page. I agree with you.
I appreciate that, but
Okay,
you've got to be much more tenacious when we don't deliver something. Your obligation under contract is to deliver an audit to us by July, a completed audit. And that's what it's been since the word go in the contract, if you pull it out. When we're not doing something to make that happen, you have to be very aggressive in terms of getting the things you need.
Right.
And then send a letter to us and tell us, it's not gonna happen unless I get this, this, and this. The communication, though, I don't think has been there. It's been like a ship on a rudder.
it
And
hasn't. We never met you, and I would love to come meet you guys in person. It's always been the only communication I've had was really between Jennifer and Lauren. That was always my contact. So, I apologize. I never was able to get directly in contact with the board. I usually prefer to have a relationship with the board. So, like I said, you have the freedom to call me, and I can call you, and we can put you on all the emails as well. So you're aware of the communication going back and forth, whether it's multiple times or over a few months. So then everybody's on the same page.
Yeah, I guess that though, I'll interject there that I would expect you to work directly with management, and the board and finance committee would be ad hoc, right? That you should be working directly with grant managers to get everything resolved and buttoned up, so then you present it to us. So yeah, it's great that you're willing to meet with the board and everything else, but we just want you to work through the normal channels because we're paying a management fee, we're paying an accounting firm. We want you guys to do the business, get it done, and then we can discuss the results.
Again, and I agree, we do work with management. It's a two-way street. We ask for information, we wait, we get the information, it takes time. And so, yes, I totally agree with you on going to make every effort to make this a better experience for you for this 2024 year end. It's like,
So
soon
then
as
I
this
guess-
is done, I want to roll right into 24. I'm not even going to wait.
Yeah, so I guess let's kind of put some tentative structure here before we jump into the 2023, because I know the committee has some questions there. But is it fair to say that the 2023 is going to be done by February month end? And then are you committing that you're going to have 2024 done by, say, April of month end? Is that what we're looking at?
Once you guys approve this part of the audit, then if you sign the rep letter, it can be finalized in a week. And then if Jen and them want to record our journal entries in their December financials, which would be very helpful, then when she sends us the information, it's done and it makes it a lot more efficient. Because if we're not booking the journal entries, you remember, we're taking now a lot of time, and we have to go back and record all those prior journal entries from the previous year to get the financials back to the beginning where they were as of 12/20/23, and then go forward and do the audit for 24. So if she would book the entries, it will make our job a lot easier fulfilling the deadline for you of, getting you the draft by the end of April.
Okay, yeah, and I think, Jennifer, if you can track down that one letter that they're waiting on us on, let's get that done this
That's
week.
that letter is for CCS. It doesn't
Yeah.
it doesn't affect the CROA audit, but yes, Eldonia. I'll work with Eldonia to get that. I have requested it already. But yeah, and then as soon as the board signs off on the audit entries, I can get those in. There's pretty quickly, so. And if I have
Then
to
I would
publish,
want-
if I have to
but
publish
CCS
December and republish it, I can do that too.
The entire board is on CCS, so you're waiting on our board, not anyone else, right?
I don't know who the CCS board is. Is it the CROA board?
It is the Crow
Yeah.
board, yeah.
There you go. So that's what we need.
Before, I think it was Cindy, so there was like a transition.
Oh, okay.
Yeah.
Okay.
That's why that piece didn't make sense, because we were talking about the same entity, just a different name of a group of people. So that should be done. All right, so let's get that done and taken care of this week. And then the next thing would be Jennifer for the workshop in February for the board. Prep all those journal entries so we can have a discussion then to get those approved so they can be adjusted accordingly so we can wrap up 2023 before February month then.
And then
That's
what
one
I
of the
would like,
questions I had. So why are there so many journal entries? Is there any materiality threshold? Is there a problem in the,
Wait till we get to the document.
okay.
I think we can look at that, talk about it.
But I guess in finance committee, are we on board? Is that appropriate for a timeline of what we're trying to get this thing resolved and back
Yep.
on track for how far behind we are?
and I want to make clear, the CROA is the one that's the most important one that you guys want done right away too, right? So I can make sure that in the order of importance. Okay, we'll get that for you.
All right, then if we're good on timeline, do we want to, oh, good.
Andrew, internally, we might want to talk to the board about the approval process or what's happening here. If they're holding this up and they've got all the authority to approve and keep the process, there's nobody on there with any financial acumen except yourself that understands this. I don't know why we have them in the process there. I know someone's got, maybe it's just Don that has to sign off on it. You don't need the full board to talk about it or whatever. We need to expedite that some fashion.
Yeah, I agree that we need to clean that up as far as what that process is. And if there aren't too many journal entries or they're straightforward, then maybe we could do it at the workshop. If not, then we can push it to the board of directors meeting later in February.
I mean, I'm just trying to help on our side too. And Seth, don't for a moment think that, compensates for what you've done and what you've not done, because the ball's clearly in your court on this thing.
Okay.
Okay, can we start walking through the 23 audit?
Sure.
Just one general thing that right up front that I think if a resident actually looked at these and I'm sure this is the way it's always been, but that the replacement fund is shown here includes the service areas as well. When we have our internal financials, for example, that we post every month, the replacement fund is specifically for CROA. And so the residents understand what's available for the main due paying players of CROA and homeowners, as opposed to the service areas. So I guess in the future, what I would like to see, if possible, is to break out that replacement fund column between CROA and service areas.
We have that broken out in the financial statements on page 10 of all the different entities that make up the reserves.
Yes, I know.
Right.
Yes, I saw that eventually. It would just be, I think, this is just my opinion, if any residents looking at this, they're gonna get confused if they see a $6 million and they don't go further. They just wanna look at the big picture. We're hiding something because we always say it's only 2 million for CROA. And they're seeing a $6 million number. I think they're wondering where the other 4 million came from.
Which then put another column.
Yeah.
Yeah, so you add another column is what Jim's saying, and just label that service area replacement, and the other one would be CROA replacement. So you have 2 columns. So instead of 3 columns in that sheet, you'll have 4 because you have 2 replacement columns.
Okay.
Both same. Right? For
Yeah.
instance.
Okay.
Yeah.
Oh, yeah, okay, or if you
Okay.
could, maybe throw us an email with an example of what you're talking about, so I
Sure.
can make sure we implement it properly.
Yep, I'll do that and I'll get it to you
That-
tomorrow.
That'd be appreciative, yeah.
Yep.
That will help out Patrick and I when we set the schedule up.
Okay,
Yeah,
Yeah.
and I think just explaining it, right, if you're on page 18, right, we're looking at it, you have your operating fund, which would remain the same. Replacement would be broken into two. You'd have replacement fund CROA, then right next to that, you would have replacement fund service areas. Then you would continue with capital improvement fund. then you
Okay,
would
so
do the
you want,
total.
I got you. So on the balance sheet, you want to show 4 columns. Okay, I got you. Replacement and then service. Okay, yeah, just send me an email of what you want it to look like and we'll implement it.
okay. All right, we want to go through the,
Yeah, I've got one on page 7. We're getting close now to just rolling through it. Page 7, you've got the, comment about the estimate for doubtful accounts. And you want to bring that to our attention and so on. I didn't think that was a material to worry about and have to write that in the basis of the letter. I mean, it's, what is it, $80,000, $87,000? You're calling that out in a written statement? As it's sensitive to our estimates?
It's just, that's the normal, we put it in all the letters, we're pointing it out, you know, you do have 87,000. We calculated roughly 87,000 in bad debt against the total accounts receivable of you had almost over 450,000 in accounts receivable, and we were of that, we calculated on our test about 88,000 of it to be uncollectible, you know, which is probably more than a year's maintenance fees that are due. So you had, you know, roughly 381,000 in accounts receivable on the books as of 12/31/23.
I get all that. The lead into your paragraph, read it. It says, the most sensitive estimate affecting the financial statement was. How can that be an item in the financial statement? It's not material.
It's a sensitive number because it can be affected. It could go up or it could go down. I mean, depending on what the collectability is. I mean, we're not, you know, we're saying anything over a year might not be collectible, which is kind of how we address our allowance. That's how we test it. We test anything over that's in arrears of a year, because if you were to go to the bank in a foreclosing, the most you guys might get from the bank is a year. It could be more based on what your attorney or what the board negotiates, but that's how we address it. And it's kind of a sensitive, I guess, number, because that could go up or it could go down based on collectability.
Seth, let me ask it this way. What do you consider material in a $10 million operation like this?
Material, I would probably think, yes, 87 would be under, but I have my materiality would be,
Then why isn't it there?
yeah. I mean,
Yeah.
we still, it's a normal letter that we put in with the associations, just pointing it out that they do have an allowance for undoubtful, uncollectible accounts.
All right, you die in the cross for
It's not as
It's
sensitive.
ridiculous.
All right. We can remove it if you don't like it and you don't think it's necessary.
I'm one person, the committee must speak to it.
yeah, I didn't understand why it was in there.
Okay. You
I
can
see
get
it.
rid of it.
See, you super.
I think we make this one right.
Don't consider it sensitive.
Journal entries are in here for $300.
I'm literally not sure from each
Yeah.
one.
Okay, we're up to the adjusting journal entries. I know the vast majority have again to do with the service areas. First one has to do with proper accrual of the professional fees and adjustment of the allowance for bad debt. Any questions on that one? Other than accrued is spelled wrong. in the explanation.
Oh, I
Okay,
misspell
okay.
that word all the time too. All the time. It's like my word nemesis.
Yeah.
Um,
That's fine.
Oh,
We-
okay. Number 1A. Yeah. These, Patrick, want to explain to him what the entries were for?
A lot
Oh,
of
I
the,
guess- Go
go
ahead.
ahead, I'm sorry.
Go ahead.
No, I was trying to say a lot of the, that you see the journal entries right here for like different service components are dealing with just the reconciliation of fund balance.
can you
So that's
explain
why
those to me? Because that doesn't make any sense to me, and that's gonna put a negative
Well,
fund balance when it's not it's zero right now. So why would I do an entry there? I don't, these were the ones that Seth, I was talking to you about. I'm like, these don't make any sense. I'm not gonna do them.
this is the discussion that we had that when you told me when you do the reserves, you have the budget and you guys were collecting maintenance fees to fund those reserves based on that number. And then you explained to me that, well, we don't use the money to fund the reserves. We've been using some of those funds for the operating, and then we fund the reserves with any extra monies that we have. However, when we do the audit, because the budget was passed funding these reserves for these different services, we have to fully fund the budget for the reserves per the budget. So that's why
Yes,
we had to make these entries, and they were from prior year to reconcile the fund balance. We made these entries also in the prior year, and they were also done in the prior year by Cole and Associates.
so you're making this change based on 22?
No, we first we have to record these entries because they were entries from the prior year that were accepted when the audit was approved. But we have to reconcile our fund balance back to the beginning. Well, we have to record these entries if you guys didn't make the journal entries to fund those reserves. We still have to fund the reserves to the budget. So we made all these entries to record them, adjusting the reserves and to reconcile the fund balance. And then we also had to do it for 23 in a couple areas. As you can see, when you go to the entries, you know, 5,
It's
6.
still not making any sense to me. So the entry that's one, is that an E where you've got the assessment allocation adjustment? That makes sense because you're doing that one to budget. That's fine. But you've got one B, C, D, part of E, part of F. That's the part where I'm like, if I
Yep.
have the fund balance currently at zero,
But remember though, I'm sorry to cut you off though, but those are the fund balances per the different services. So if we look
Yeah.
at green, like Golden or like South Village, there's an equity for each of those associations. They're not zero. So the activity that's being recorded on the year is effectively directing, hitting that operating instead of like the P&L, if that makes sense. Because if I look at the financial statements, like the balance sheet for Academy Row, there is a fund balance right there for 156,000. So starting the audit in 2023, we have to reconcile to what that number was in the prior year. That makes sense.
maybe I'm looking.
So Patrick, is it that we're starting with an incorrect ending balance for 2022 that's not matching up with the start of 2023, or are we talking truly activity within 2023?
So it's based on how the entries recorded during the year. So when we take the 22 numbers based on the audit and we compare it to the balance sheets received for 23, we're seeing these discrepancies.
Okay, hold on. So I just pulled up Academy Row. I'm gonna share my screen. Can I share my screen? No, I can't share my screen. The balance sheet I'm looking at has a fund balance currently of zero.
No, we're talking about operating fund balance for Academy Row. So it'll be the prior year surplus
What,
of 156,000.
so you
791.
want me to make an adjustment? Okay, first of all, it's not clear on here then, because because now you're wanting me to cross funds. If I cross funds, I have to move money. I can't do that for sure. Certainly, I can't do that on South Village for $80,000.
So
They don't have those funds. So
Because they used them for operating purposes, then they didn't fund the reserves with them. when they should have. So then that would probably create a due to between the two, right?
Uh-huh.
Because when you're putting a budget together to fund these reserves for these service components. If you're not funding them, you're still collecting the maintenance fees from the homeowners. Whether you use the money to pay from out of your left pocket, you still have to put it in the right pocket. So we're still recording the funding to the reserves.
Okay, well, so then that was my question when the last time we spoke, because the way that these entries are written, it does not tell me that it's one fund versus the other. So when I look at it and I see fund balance is deferred, I'm making the assumption that you're doing a reserve to a reserve. And what you're telling me now is you're doing an operating to a reserve, which yes, is going to create a due to due from. So now I have to go back to this area or the board and get permission to either forgive it so I can put it back or to actually move the money. And some of these people, I mean, Golden Aster, $391, they might have that, but I don't think South Village has that piece, or Parkview. I don't think they have those kind of funds.
Yeah.
So
Again, yeah, 'cause
perhaps
if
I can request this, when you do the audit entry, or put the fund there, because then it would have made maybe, I don't know if it made more sense, but I would have been able to direct my question better to you.
So instead of under the client account, instead of putting like which Golden Aster, Blue Sage, Green Lawn.
No. I need all of that. But what I'm saying is you just put fund balance. I'm making the assumption that you've given me a journal entry because you didn't tell me anything about due to due from here. So I'm making the assumption that you wanted me to do a reserve and reserve. And that's where I said, Patrick, that made no sense because the fund balance for reserve is already at zero.
Okay.
So now that you're telling me that I'm supposed to be doing operating, okay, that makes, I mean, I don't know if it makes more sense, but I understand what you're trying to do.
Okay.
So if you made the adjustment entries for 2022 the same way, that could be why, again, I'm like, I'm not doing that. This will make the fund balance negative. So now,
Yeah.
so
Which
there's
Seth
the
and
missing.
Patrick, just for understanding, the adjustments are strictly for operating, not reserve or replacement.
No,
No.
we try to list it and based on, so some are directly affecting reserves as well.
These
me ask you-
1B,
let's get
1C,
this one,
1D,
Chad.
those are all, these are
Mhm.
all crossing funds based on what you guys are telling me.
Jen, let me ask this question. Seth, the reserve, the replacement, you said this earlier, has to be brought back to budget because they didn't put enough money in the budget. It was budgeted that way. Are these adjusting the entries to take money from operating and put it in the replacement to bring them up to budget for the year?
Yeah, this is the budget. So for example, say you budgeted 10,000 for Blue Sage, okay? And you actually only funded it for 6,000. We have to make that extra $4,000 entry to fund that reserve account for the budget.
That's why I have a question, and I don't understand this accounting that well, but I don't think budget is a gold standard. You know, they will have a replacement study and we will look at that in the broad context of things, but they have to force something to the budget level when it wasn't done during the year. I don't know that's the right thing to do here. We
Like,
need to
I
know-
agree with you, but it is a common practice for HOA that the reserves have to be funded to budget. Unless the board approves otherwise. And in this case, the board didn't approve any of those.
A more effective thing would be to go back to each of these and tell them what they're short and get a plan from them for how they're gonna bring it up to date the next year.
Which is
But-
done, but so
When you-
yeah,
Actually, you're hiding it. You're just creating a problem now in operating.
right, exactly. I completely agree with you.
So we gotta get it out there, and I don't think we should be making accounting entries like this relative to budget. I know that's a practice in HOA, but you don't do it on any other line in the P and L. Say, well, we didn't make budget, so we gotta fund that fully to make it look good.
So let me pose this, and Patrick or Seth, is it possible to do something like this as far as, you know, if I look at, say, an escrowed mortgage, right? You have your escrow balance, and then if it's short, you have your escrow shortfall, but that's all following on the same side. Rather than pulling from operating, is it that an adjustment needs to be made for some type of reserve shortfall to balance out that side?
I don't know what that entry would look like, Andrew.
Yeah, I'm trying to think of that.
I there's nothing to go against it. You'd have to,
Yeah.
you basically, in essence, we need money. And the only place
Yeah.
to pull it is operating.
From operating.
Yeah, which I know
So
some of those service
that's what they're
areas
trying
don't
to
have
do
the
here.
money, so there's no ability to make that.
Right,
Yeah.
and their budget for 23 was better, but for 22 was a problem. So,
Yeah.
and then for a
You're
couple of them for
using-
23s are got some do to do froms, and certainly a
I
couple
mean, I
for
guess,
24. So,
or is there gonna be something where the service areas have a liability back to CROA to
no, it's not
facilitate?
back to PROA. It's to themselves.
Right, but if they have no money, then you can't send it.
It's an overdrawn.
Exactly, which is gonna sit on their balance sheet as a do to do from for a very long time.
Yep. Or you're gonna
That's
have
what's
to
gonna
increase
happen.
your probably increase your operating budget because you're utilizing your reserve funds to pay for your operations. So
Yeah.
that might have to happen as well.
So what I'll do, Andrew, if that's what this is, I make all these entries and then Rose will have to go back to the service areas, committees and basically say, this is your serious shortfall. And then they can make a recommendation back to the PROA board to how they want to handle it.
Yeah, I guess if you can break down which ones the transaction can be done and it's still net positive versus if it's done, it's gonna be a shortfall. And
Yeah, so
hopefully
the
it's all
service areas are
handled.
starting to get finished now, but I'll have to hold the rest of them or republish the ones that just went out so that this can be reflected in their balance sheet correctly. But I'm glad we're talking about this because the last time you and I talked about it, Seth, I didn't have the cross funds, I guess wasn't
Mhm.
clear. So that's why I'm like,
Gotcha.
this is making no sense. So when I sent you the screenshots, like this makes no sense. And I didn't get anything back. So I thought we were on the same page. So then when you
Mhm.
sent them back again, I'm like, okay, I'm still confused. What's happening?
Yeah, we had to make it because we had to reconcile the fund balances back to 2022.
And I guess just in short, is it true to say that the service area is overspent and that's why they have these shortfalls?
Yes.
Yes, and the
Which
operating
that's,
side.
that's a problem then.
Yeah. You're not the only association that this is happening with.
Oh, no, for sure. For sure
So
not.
It's not like an open.
Yeah, no,
position for you guys. It's,
I'm sure we're not unique, but I would have thought if someone's going beyond what credit they have available, that was brought to a board level before additional expenses were incurred. And if we need to break people's hearts in town to say, you don't have the money in your current budget to afford certain things, then so be it. But to continue to go negative and then have the auditors come find it, that's an issue that I take up with.
We have these service areas and many of them don't have scale. When they run into a major expense, they're shot. I mean, there's just no reserves, there's nothing.
There just
They're just-
isn't. Some of them only have like 6 people there.
Exactly. And you can't, if you're gonna lose a roof or something like that, you can't afford to charge them a huge fee because then it makes it, unbearable. And they set their own fees, don't they? We don't tell them what they've got to set at. So you got the
Correct.
Fox and Ham House, which is really, it's all screwed up and we're not providing much oversight here either.
Right. So let me ask you 1F, we're talking about the deferred, the fund, I get it. You said miscellaneous expense. Which one? We got lots of those. When you say miscellaneous expense, what is that? Is that an operating? I know it's operating most likely, but is it an admin expense? Is it repair expense? What do you mean when you say miscellaneous expense?
That's just the difference to tie out to the operating fund balance. So it really doesn't matter because it's in P&L. So it can be to any admin miscellaneous, but that was just the difference. You needed to reconcile the fund balance, operating fund balance.
Okay, because you did the same thing for 1H and what is it, I'm like, what the heck is miscellaneous?
yeah.
I mean, in 1K, you said specifically admin miscellaneous, but ours and parks not mine, so I don't care about ours.
I believe I probably used specifically miscellaneous admin because they probably had that account number. They had that account there, so I felt like that would have been easier just to put that there because some don't for the other service funds. So
I just want to make sure I'm understanding where you're coming from and where do you, when you say miscellaneous to fund balance, what are you trying to do? What's the point? What's the reasoning behind it? I know you say you reconcile fund balance, but what are you trying to do?
Just to get the ending number, the top from prior year to the beginning number this year. That's it.
So you're basically pulling an expense from 23 and putting it back in 22.
Because yeah, because I'm assuming that during the year, the activity that was recorded that affected fund balance, that was recorded there instead of flowing through the P&L.
Okay.
Instead of miscellaneous expense, does it make sense to call it something else as far as prior year expense or something else that it would tie to?
I'm going to be putting these entries in December 23, so no one's really going to see them.
Okay. I mean, they're not that big, so it could
No,
fall in the
and
miscellaneous bucket, but didn't know if there's
pretty
another
much all
terminology
the
we should
service
use.
areas, they all, I mean, and CROA too, they all have a miscellaneous admin line.
Okay.
These are all service areas.
And then your allowance for bad debt adjustment, that number 2, that is basically based on your calculations of what they should be.
Correct.
Yeah, we test that on an annual basis. Yeah, and our materiality, for misstatement was actually tolerably misstatement was actually 82,000 this year for this, which is where we got our an allowance entry for 87. But
Well, you've got CROA at 44, and then the rest are service areas.
yeah, in totality, correct. Yeah, because we test the accounts receivable as a whole for all of them.
Right. I think that's the biggest thing is remembering to what Mike said, is that it is all one entity, even though they're used to just CROA, people just talking CROA, whereas you guys, Seth and Patrick, have to look at the whole thing. So anywhere where you can put in these reports the differences or spell it out, like make it really obvious, this is CROA, this is service areas, I think is extremely helpful.
Yep. Patrick, I think what we could do is add another column on the AJEs and probably differentiate the account numbers. So Jennifer knows where or what account we're going to.
The service area, they don't have account numbers on their balance sheet.
It's fine. It's the same balance. It's gonna be the same. It's the same ones. It was just when you throw a word like miscellaneous, I wanted to be clear what you meant.
Okay.
But just
So I would
overall,
also
just overall,
suggest,
Jen, you never booked the 2022 adjustments, correct? On this, because you didn't think they should be booked?
because they didn't make any sense.
Okay,
And I didn't get that explanation where Seth is giving it to me now. That's what I'm saying. It was like one word he said that I was like, hold on, you want me to cross funds? That's a different thing. There isn't really good explanations under each one of these AJEs. It just says reconcile funds. So it doesn't tell me one is operating, one is reserve, or what the point was.
okay, so I guess now we all understand this and we can get this reconciled. And so the entries that you're gonna present to the board for 2023, you can get satisfied with by looking at the balances and saying they're all correct.
Yes. Seth and Patrick, can you just make a note? You don't have to do it for this one necessarily unless the finance committee wants you to. When you're doing these AJEs, I know like number 2, you've lumped them all together as far as like all the bad debts and stuff, but can you put CROA in like a 2A and then put service areas in like a 2B?
Okay.
Yeah, we could break that out because that's just the CROA asset and then
It's just a presentation type of thing. If you could just.
Not
a
yeah,
problem.
we'll separate. Yeah, actually, we'll do it on these entries for you. We'll separate CROA from the service ones. Okay.
Um,
2B. Okay.
Number three, you're below bad debt now. Number three there, depreciation, what's that entry?
You do
That's
have
the-
assets that need depreciated, but depreciation is not part of the budget that's done. So therefore, I don't make any entries throughout the year, so the auditor will make them.
Okay, got it.
I'm sorry?
Got it. We're good.
What about the next one, number four, that mixed bag there? Taxes, repair and maintenance, accounts payable.
Based on your description, there's some sort of invoices you found that should have been booked back to 23
Correct.
that you found in 24.
Yes,
Okay, in those particular areas?
yeah, to record, yep, additional account payable found as of 12/23, correct.
That's fine. That helps 24. I understand 5 and 6. That's to get them to budget.
Sure.
Mhm.
So Island Village could not get anywhere near their budget because they budgeted as if we had so many homes in the beginning. But then if you guys recall from 23, they kind of straggled in a little bit later. So that one may be 100% appropriate to ask the board to forgive. Because there was not enough homes to fund it. So it wasn't like they spent too much money or, had cash flows of problem or anything. There wasn't enough homes to collect income, whereas it was budgeted thinking they were going to.
Yeah, Jen, I don't think you say forgive. I think it's waive the requirement to get back to the budget they had done because it was a poor budget.
Right.
So you waive having to raise it, but then the acid test is you've got to look at where they are in reserves and where they'll be in the next couple, 3 years and determine if they're on track to get that.
Right, and that was done in order to complete the 24 budget. There was a review of what they have in reserves based on what we have booked, not what his entry is. This entry is actually going to inflate it by $48,000.
Yeah, do you guys understand that Island Village is a new development here? So what happened is it opened in 2022, so what Jen's saying is not all the townhomes were filled 2023. They put a budget together for an annual amount as if everybody was in, but they weren't. So that budget was way overstated.
It
So
was
you gotta
inflated.
Yes. Deleted.
They
But you
inflated it.
need to make sure that they're on track, that they're not got a big hole that isn't going to be achieved in the next couple, 3 years.
Right, but that's when they go through the service area budgets.
But each one of them almost has to be looked at that way, not just at what the budget is. It's got to be more at what the expenditure forecast looks like. Because the budget is the number that we pick that, we pick it out of the air, but it's not always accurate. But we can do a much better job of knowing where we're going to be in terms of our expenditures and the outlook from the studies.
Yeah, the reserve studies.
Yeah, they did, when doing the service area budgets for 24, that is exactly what they did. They looked at the reserve study, where should they be, how much should they have? And then they'll determine, okay, well, can we, just like Crowa did, can we afford to do an allocation of what is recommended, or do we need to change that based on our expenses? So I can't speak offhand exactly how well Island Village did for 24, but for them to do an extra 48,000, that's hefty.
I can tell you they did not. But it's the 24 review was done. They contact me and I go through it with them, so they're all set.
And the Island Village, that, I don't see that as part of that. Was that part of your, that wasn't part of the reserve study because it was done in 22.
Right.
Right,
And I have it on here, yeah.
right.
It's all.
It was just in the most recent one that was finished a few months ago.
We'll need to get a copy of that.
The current reserve study?
Yeah, we're gonna need a copy of that for sure.
Oh, yeah, that's something that you guys will ask for, but I'll go ahead and send it over to you. I can send that over to you shortly. So 7 and 8 is Artisan Park. I always give Artisan Park the insurance, just kind of makes me laugh. They never book it. Speaking of which, of insurance, just so that you guys know, Finance Committee, that's what I'm waiting. That is the last piece I'm waiting on for Crow's financials. Is because I need the insurance for Artisan Park to book on CJC. So therefore I know how much CJC owes back to Crowa. And then Kevin from the insurance company said he would get it to me by tomorrow, Thursday. So, and then hopefully we'll have some financials final. And what is, what is 9?
9 is basically just an expense that applies to 2024. That's applicable to 2024.
An expense for what?
Yeah,
Um,
do you have some
pull it up.
details with that? That's quite a large number.
Hold on, I can pull it up.
Must be a pound invoice again?
A what?
Just a sheet there. Reclass, right?
It's gotta be a balance sheet, yeah.
That's gonna hurt 2024.
Yes.
But isn't that just a balance sheet reclassification? Aren't those two balance sheet accounts?
Yeah, it'll be reversible, so.
It was dealing with Protect Securities. It was, the description has it for, it was a January 2024 expense.
Makes sense.
Yes, stinking security people.
But Patrick, is this just a reclass on the balance sheet?
Yes, it'll be a reclass because it wasn't even paid in 23 as well. So that's.
Okay, okay.
Yeah.
All right.
It's a
gotcha.
reversible.
All right. No problem. Thank you.
Mhm. Okay.
So
Yeah,
again,
so
when you,
if you guys
when
are
you
gonna
issue
meet,
financials, you don't include these adjusting entries in your report, correct?
I'm sorry, you asked me?
No, I'm asking the auditors. When you issue audited financials, I mean, I've never seen where adjusting entries are included in the audited statements. Do you include these when you publish the complete audited statements?
Correct.
Yes.
And that's required for homeowners? It's typically, you know, in public company or even private companies,
Yeah.
you have your opinion and then you have your balance sheet, your income statement and your notes.
The
So
entire package doesn't have to go to the homeowners. The board can
No.
decide, to just choose a few pieces. The auditor is just putting it all together in one PDF.
Correct.
Okay.
Yeah. You guys are, the board is only required to actually show the audit to the community if they request a copy. You don't have
Okay.
to show them all the extra stuff that goes with it. No.
Okay, so this just goes to the board, then they make that decision. All right,
Correct.
thank
Yeah. The unit owners don't have to see the adjusting journal entries because that's
Uh-uh.
more of an internal thing between the, management, the board and the auditor, just fixing the financials. That's all.
Okay, my next thing was on page 13.
Yeah.
Just one last comment on the entries for 4, kind of what Jennifer was saying, just clean it up, either make it 4A and 4B for Croa versus Spring Lake, or make an extra number and just break those out.
Okay.
And just, if you don't do it on this time, I mean, now that I understand, but just in general, put the fund on there.
Will do.
Mhm.
Thank you.
Make this fast. All right, page, what did I say, 13.
Yeah, that was that's the management point. You know, you guys did everything good. That was just saying, hey, you know, appreciate it by recording the journal entries because then it would make, you know, starting the audit and getting involved in a lot more efficient and, you know, a little cleaner for us.
Well, I guess I had a little heartache with this,
Yeah.
given where you've been on your timeliness.
I'm
And,
gonna remove it for you.
okay, don't make me go into it because it really says, it talks about internal control. And as soon as the reader, even a layperson, reads something about internal control, we have a recommendation for internal control. That's a big red flag. I mean, that causes you to sit up straight in your chair. But I'm glad you're gonna remove it because I agree with that.
You don't, okay, you want me to remove it? You agree with removing it,
It's
correct?
one person.
Yes, yes.
Okay, we can do
Okay.
that. That's out. Gone. Pull it. Right, next. Page 18. Hey, Patrick, the contract liability deferred revenue, that was the deferred covenant fees, correct, right? Which were
Yes.
fines imposed by the committee.
Yes, for the 84,943.
So, okay, I'm on page 18 and I'm looking at the contract liability deferred reserves.
Okay.
I mean, we spoke about, I guess you mentioned that earlier about separating between CROA and then the service. We can do that.
On the financial sheet.
Yeah.
That's
Because
what you're
in
referring to?
totality,
That's totality, I understand it, but why do we call it deferred reserves?
Because the whole idea of the ASC 606 says that any
Yeah.
money collected for the reserve, for the purpose of the reserve study is a liability, meaning you can only use those funds for the reserves. So,
Deferred for the future. Okay.
yes,
reserve for the future, so it's
and
a
the income
deferred
is,
type of thing.
and
I'm
the
good.
income is recognized as the money is spent, correct?
Yep. So yeah, by putting another column to separate the service areas, it'll be a little more clear what CROA's is. You add that to your titles too, like CROA operating, CROA replacement versus service area, even if you put service area as an SA, but just so that the other three are very clearly CROA.
Okay.
On 19, your replacement fund doesn't total to the bottom, there's no number in there.
That's correct. It's not supposed to total because it is in the liability.
Ability.
What should have a begin, in the subset on the bottom, a beginning balance, prior period adjustment, I mean, there's nothing there, and then come up with the fund balance ending. Why would that have a number there?
I'm sorry, can you repeat that, please?
Okay, I have page 9, I'm on
Okay.
19 computer, and I'm on statement of revenues and expenses.
Page 5 of the financials.
Thank you.
Yes.
Rusty.
So think of it this way, your total revenue is 1.1 million, your total expenses is 1.1 million, so therefore your ending balance is 0.
So how did that happen?
Because that's the whole point of that deferred reserve that you just asked about, is you recognize the reserve allocation as you spend the money. So therefore, your net surplus and deficit for the reserve will always be
Always be
0.
zero. Yeah.
Under ASC 606, when they made
Okay.
the change, it really
good.
just shows you the activity for the current year under the replacement fund. It's not like this is funding and then this is your beginning and this is your ending fund balance.
Which along those lines, 2022 was 0, 2023 0, and expectation is it's always going to be 0.
Yes.
Okay.
Yeah, I heard that there's some sort of talk in the accounting world about changing that ASC 606 so it doesn't apply to HOAs.
Yeah, it hasn't happened yet because a lot
That's
of people
right.
don't like it because it's so confusing across the board. But unfortunately, they haven't changed it yet. And until they do, we obviously have to recognize it like this.
Okay, so on the cash flow statement, first of all, if you have purchases of fixed assets, aren't they investments? Am I seeing
Yep.
something?
No,
we call-
and that was changed. I had sent an updated draft the other day to Jen because we had made some changes and we had to go into the cash flow. So when you see this new draft that we actually have, it says purchases of investments.
Okay, and then what's the math there? Or maybe I don't have this up to date version of this, but the, I don't see how you're getting to the total on the one I have. So the purchase of fixed assets. And then we have two big negative numbers coming to the negative number in the replacement fund.
That's not a purchase of an asset, that's cash.
But that's investment, so you can make that. investment.
Whatever it is.
Yeah.
So you get down to the bottom, that says cash and cash equivalents at the end of the period is $853,000. That's on the back portrayal of our capital fund.
That's the amount of cash and cash equivalents of investments.
Yeah.
Well, the investments is cash.
Yeah.
We say to people, we have 3.2 million or whatever in the capital fund. That includes investments. It doesn't matter whether we have it in a bank account or we bought a treasury with it. It's not like we built a building or we did an expenditure. This portrays that we're down to $800,000 in the cash fund, which is totally wrong.
Yeah, it doesn't really make a lot of sense.
The investments is a current asset, just like for under a year, it can be redeemed. They're a current asset.
Right, so that's what I was saying, they're all in T-bills, so is there a way that we can portray this differently so that the cash and cash equivalents appear more correct, is what Mike is saying.
Okay,
Wouldn't a US Treasury be considered a cash equivalent?
but it's separated on the balance sheet though, on the T-bill to basically just on the investment line item though. So it's not considered cash and cash equivalents.
So then would it be appropriate to almost duplicate that cash and cash equivalent beginning and ending year for investments of two line items right below it?
Yeah, again, if you go back to previous financials, the celebration was not investing. So now that we're investing, it kind of changes things from what you were doing probably before, where you were just looking at cash. But in order to make this correct, and I really believe you've got to include the investments. So when you come down to the final balance of the capital fund, it is equivalent to what you have on previous statements.
And I guess would it be appropriate, do we call it short-term investment as its own piece?
Well, why can't we just say the net increase or decrease in cash? Rather than including the investments as a use of cash, take that out and just the things that you bought assets with, that goes in there. So that 2.2 million, we didn't spend 2.2 million on the capital fund. But we did when we traded cash for securities. So you've got to get that out of that use of cash in that particular line, and then it'll work. They have a right number at the bottom. It's not a use of cash.
Okay.
It's a reclassification of cash.
But we do have to account for that on the financial statements though. So, and that's what that transfer of cash is still an asset on your balance sheet that was used for actual cash.
Absolutely, I agree. Current asset. I agree.
On the cash flow, it should be included in the total amount.
This looks like the money left the organization.
Yeah.
I think Seth's got it.
Okay. Yeah, I think we're gonna look at it. Maybe it's just Patrick would look in the computer. It might be just a formula thing where we could change it to a positive number and adjust it accordingly. We'll look inside the formulas.
Okay.
'Cause I see what you're saying because it's.
Oh, we
it
can just
shows
put
that
also
the
too like
negatives coming out.
We can change the title too, I guess, to make it more clear to the reader.
Wait,
And that would impact
Right,
both the
make it more clear.
replacement fund and the capital improvement fund, both those two.
Yes,
The bottom line's got a record, has to be the number that's in the capital fund.
correct. So when we look at that bottom number of basically the 853,000, that's the total cash the associate has in the capital improvement fund.
What they're arguing, Patrick, is that the T-bills is a cash equivalent, so therefore that total should be inclusive of both of those items.
So the end of the cash flow should say cash equivalents and investments.
Okay, equivalents, investments.
Because a lot of the T-bills though are over the 90 days though, so that's why it's broken out separately as investments, just because of
But
how
but
long
on
they
a
hold.
cash flow statement, your balance, the amount of cash you have is the amount of cash you have.
Let me make
That
this,
includes T-bills.
let me get into the
Yeah,
weeds.
no.
Suggestion. Let me make this suggestion. Go up to the line that says net cash provided by used in investing activities. Okay, we don't use money it's just a reclass of cash, it's still current assets. Take that whole line out and it'll flow perfectly.
Yeah,
We should be showing investments as a use of funds. So if you take that line out, everything will be golden.
okay.
Can I go back to the income statement for a second? You have the interest income, and you have a note on this also saying that the interest income is earned by operating replacement and capital fund. That's not the policy of the organization, of PROA.
Well, we changed it in 24, so this is 23.
Oh. So we're gonna leave, okay, so we're gonna say that policy changed in 2024.
Yes. Because we just started investing, we didn't get as much interest as we did. And that's when we made that decision to change where the interest income was gonna go. You agree?
I wasn't listening, quite frankly. I was reading.
Yeah. Yes, it was in 2024 that was budgeted that way.
Yeah, when we voted. on this
Right.
interest.
Yeah. That's,
We can vote on it again for next year. Or no, we can't, we did the budget. We made that decision.
we already made it.
So for their purposes then, on the balance sheet, are they gonna leave 23 spread out and then just pick up 24 on the income
Yeah,
statement?
I think that's the way it was.
Okay.
It was decided, that's how we came up with the initial balances for 24 on their funds.
Okay.
Okay.
I'm only the way up to 24.
Can I ask one more question?
Page
Before we go on?
24.
So before we get off the whatever I'm calling the income statement. We say in the notes that we don't have any tax provision. But going back to what you said before, I'm very confused about 1120 versus 1120 and are we gonna have a tax provision? Are we gonna have taxes? Have you done a comparison? I mean, have you done what the potential liability would be under using both those returns?
Yes, the 1128 and 1120, correct.
Okay,
The difference between this year is just because that large amount of income received, especially 150,000 in interest income that the association had in 23 compared to 22.
okay, but you can allocate expenses against that,
Not interest,
not interest.
No,
correct.
I was just gonna comment that 24 is that breakout of the service areas. That's number 10, 40 on your 6,
Yeah,
page 10. So that's that whole thing. We have those two columns, so that's gonna take care of that. 25. My 25, it's the first part of the notes to the financial statements. Capital improvements, just a reminder that number 5 will have to change next year. Because that's the change our method of resale, but that wasn't effective until January, so next year that note will change in the financial statement.
all right. And then we'll get that information from Jen, also, so we can make sure we update our notes that there was an amendment or a change with your working capital. And also when you fill out the management inquiry, we'll also see it too.
Mhm.
Change.
Well, I guess, Mike, would there be a change? Because that didn't go into effect till 2025. So
Yeah.
it would have,
Yeah, it's not for this. No, it's not, and it won't be for the next one we do either, the 24 audit. This is 23, neither for the 24. So next year, when we're doing the 25 audit, we'll give a change.
yeah, just so you
Okay.
guys know, the 24, you won't have to worry about it. The
Oh, it's
25 you will.
25.
Okay.
Okay.
It's effective in 25.
Alright.
Yeah, absolutely. Thanks, Andrew.
Okay.
So my page 30, so that bit, I think, on this, Jim, about the comparison to the budget.
Mhm.
I agree with Jim. I think he said it. I don't see any reason to have a comparison to budget here. And the very
Okay.
next is going to show the actual, the next section, which the next 4 pages, the 3 pages are going to show the actual for everything, including the service areas. And I think that suffices to show another presentation of a P and L and balance sheet relative to budget, or P and L relative to budget. Doesn't make any sense.
Yeah. I mean, if you don't want the budget comparison, you know, that's fine. We don't have to put it in the financials for you. If you don't want to show it.
We do not.
Okay,
This-
then
I think we have to
we'll
put, this
remove it.
particular one, we'd have to put a footnote in there because we had a $250,000 expense that we never budgeted. So we show a $400,000 miss, but 50% of that is, you don't want to know the details.
Yes, I mean, if they want to see the details, they can look at the monthly financials if they're that concerned.
Well, yeah,
That's true. And if they want to know the budget, they get the monthly financials. It shouldn't be in the audit report.
you got the whole intro in that last section where you've got the spread of everybody for balance sheet and income statement and all that, so you're fine.
Yep. Yep. Do you also want us to remove the balance sheet by division? You know, we just put it in there, so, you know, for just more, you know, information for the reader. But did you guys want us to get rid of that balance sheet by division as well? And just keep the regular balance sheet that you have?
I really like this. My concern is, are the numbers right? And I guess, Jen, you would have to go through this to make sure the numbers are right for someone in your group, because again, that adjustment we just talked about for Island Village, of course, is gonna change some of this. But I mean,
Well, the numbers that he's presenting here are based on those audit entries. So, but yes, one of the things when I do the audit entries, I then go compare our system to what he's given us to make sure everything matches.
so I'll
Is
pose
that what
this
you're,
out there.
that's what you're
is,
saying, Jim,
does-
right? Just to make sure that it matches.
Is it
absolutely.
appropriate, is it appropriate for that to just be the service areas when we have that breakout? I mean, Crow is just going to be duplicating that information, so I don't see the need for that to be here. But when we have so many service areas that go up to that one line item earlier, is that where the breakout is appropriate?
Because isn't CROA kind of included in this totality of numbers with all the services there
Correct.
too?
Yeah. So like on the front of the statements, though, when you look at the operating fund, it's encompassing by all Crow and the service items.
The only places you consolidate.
Yeah. Yeah.
And this would be the only place we'd have a consolidated presentation with detail.
Mhm.
You know, that this would be the only place you could go to get it, if you wanted.
I'm fine with keeping it if you guys are. I don't have an issue.
Yeah, I can get rid of page 30 through 34, which is the budget comparison, and then we'll keep the 35 through 38, which shows it, you know, broken out by CROA and the different subs.
Yeah, yeah, that sounds good.
Keep this. Yeah.
Anybody else?
Any other questions you guys want to address? And we will definitely go back and make some changes to these financials, Patrick, you know, to see if we can make them work for them for the way they want them presented.
Yeah, I guess the question would be, how quickly can you guys turn it around to get the revisions and final version back to us here?
We can get the revisions for the, we can get it by the end of the week. I can work on that actually tomorrow and then just knock this out. So you can have this by the end of the week. And then for the to finalize the report, though, we just need the signed representation letter that's included in the draft.
All right, so then does that work that if they get it done by this week, then finance committee has all next week to look at it? And if there is any additional revisions or something that was missed, we can
Correct.
avoid that and communicate through Jennifer on that.
Yep.
And then
And
once you,
then from our standpoint, we need to get you the CCS engagement letter. So that's what
Yeah.
Grand Manners owes to the accounting firm here. Then hopefully that'll be done by Friday as well. So we'll get those
Okay.
things resolved, and then February, I guess it looks as Jennifer with those adjusting journal entries. Let us know what that looks like before doing it, but how negative we are with some of these service areas and what the true material impact will be, so that then the finance committee will at next February's meeting have a discussion on what there is to be, because I don't think we're going to get it done for the workshop, but if we have our finance meeting prior to the board of directors meeting, I think that's appropriate.
yeah, we're trying.
And and Patrick and I are available again, to do another Zoom, and then maybe after, when tax season slows down, after tax season, after you've had the CROA, we can come down and go over the financials together in person with you.
All right.
That sounds good.
Thank you very much for your time. We
You're
truly,
welcome.
and if you ever want to come to one of our finance meetings, you're always invited.
I
Thank you.
appreciate that.
Appreciate
I'd love to come meet you guys. I'd love
Thanks,
to come meet
Scott.
you guys and want to make you
Take
guys
care.
happy. We didn't have this meeting last year, so I'm sure we probably could have covered some of the stuff last year, but it was very nice to have met everybody today, and at least we can have a relationship and communication going forward. Feel free to contact Patrick or I if you have any questions or concerns that you think aren't being met.
All right. Thank you
And
very much.
again, I'll go outside the circle if I need to from Jennifer and Lauren, and reach out to you guys if need be. Sorry, Jennifer.
Me soon.
Respond as quickly as I can, so but feel free.
Egypt and Celebration Brewery.
If you do that, Seth, if you do that, the first question I'm gonna ask you is, why are you here? Because you guys should be able to work this out, and we shouldn't have to be talking about things that aren't getting done between the two parties. So I'm gonna ask you,
Agree.
at the same time, I'm gonna say, why? Why are you here?
Because.
I'm here to
Yes.
meet you guys, spend time,
Right.
get to know the board.
Social is great, and building relationships, that's great. But if you gotta come to us for problem resolution, I don't know.
All right, let's end it.
All right. Thank you so much, everyone. Have a good
All
night.
right.
Have
thank you.
a good night.
See everybody.